Today, I want to look at REDFIN stock. As you guys can see, REDFIN, they actually beat earnings. So this was the earnings for the second quarter of this year. They beat by $3.6 million. That's a beat of 7% year over year from last year. So that's pretty good. I want to go also see the earnings estimates for REDFIN for the next 2 years if possible. Let's go down here. Okay, so for 2024, they expect to do $1.4 billion in sales. And then 2025, 1.16 billion in sales. And then by 2026, 1.26 billion in sales. Now these are the year over year percentages they plan to make. The total debt is pretty high, $1.6 billion, but the market cap is $926 million. So REDFIN has more debt than actual cash. Their ratings from Seeking Alpha. So the Seeking Alpha analysts have at a hold, Wall Street hold. The quants rating is a strong sell. Let's go check out the chart of REDFIN. So this shows the 1 week chart. Let's check out the 1 day chart. So the peak of the 1 day chart was at $100 back in 2021, I believe. So yeah, so the peak was $99.50, and that was February of 2021. This was because our federal funds rate was very low. So yeah, as you can see on the screen, so February of 2021, the Fed funds rate was at 0.07. So people were buying homes like crazy, right? Let's go check out the homes for sale. So March of 2021, February, yeah, that was over 6.6 million homes sold on January of 2021, and then in February of 2021, 6.1 million homes sold. Right now, we are at only 3.8 million homes sold. The forecast, so our forecast is set to go up actually. So March of 2025, they expect to sell 4.7 million homes throughout the whole country. Now that's great for REDFIN, that's great for Zillow as well. But in my opinion, REDFIN is in big trouble because they have more debt than total cash, and they are still growing. Their stock price has came down a lot in the past 3 years. So the price of REDFIN right now sits at $7.60. That's very low, and we still have to see if the Feds will cut rates this September, and they do cut rates. They will probably cut rates by 0.25%, which is only 0.025 basis points. So the stock price is at $7.60. There is a line of resistance at $9, but REDFIN can still fall to $5, eventually $4, and eventually $3, which would be terrible. These companies, they survive off their share price. They use money from investors to invest and to run more ad campaigns, hire more people, buy out other companies, and the stock price of REDFIN comes down more. That's big trouble for REDFIN. In my opinion, REDFIN will eventually get bought out by someone else, by either Zillow or EXPI Realty. let's go check out something else too. So Redfin, they make 60% of the revenue from homes being sold, and as you can see, home sales have gone down a lot, almost $3.5 million in these 3.5 million homes sold in these past 4 years. Yeah, so Redfin makes 60% of the total revenue from home sales because they charge a fee for sellers to post homes for sale on their platform. The federal funds rate right now sits at 5.33%. But like I said, in September of this year, which is in 1 month, there are rumors that the government will cut rates back down, which, in my opinion, should spark a an interest in home sales, and that may help out Redfin. Let's go check out the search trends for Google. So this is a good metric to use for checking companies or checking a status of either home sales, car sales. So this peaked out on between April 11 and April 17 of 2021. The top search trend was homes for sale on Google. And as you can see, since then, three years later, the search trend for home sales has declined a lot, and now we are at 50%. That's not good for Redfin at all. Let's compare Redfin to Zillow real quick. So let's take out these ones. Open Door. Open Door's trash. Check out Zillow. Okay, so your price to return has Zillow has been Redfin on your return on investment by a lot actually. So Redfin has lost 24% in the past year and a half, and Zillow has only lost 2% in the past year and a half. And like these losses are because home sales have declined a lot because of high interest rates. Yeah, so these are the returns for the past 5 years. Redfin has lost you 57% of your money. That's half of your money. And Zillow has made you 50% more of your money. And these stocks pay no dividends at all. Performance, yep. So the past 5 years, we already went through that. Now this is interesting. So the short interest. So this is the percentage of either people, institutions, companies shorting the stock, and Redfin has a high short interest at 60%. That's very high. So it means people are betting against Redfin because people think that Redfin will perform badly in these coming months or coming years. So this is the revenue. So the TTM is the 12-month trailing. So Redfin, they are at $1.1 billion, and Zillow's at $2.07 billion. So cash on hand, Redfin has $204 million, and Zillow has $2.6 billion. Yeah, in my opinion, Redfin is in trouble. They will probably get bought out or hope for the federal government to drop rates down a lot so people start buying homes and Redfin can make more money on those fees. But yeah, guys, tell me what you guys think about Redfin down in the comments. Is it a buy or is it a sell? And in my opinion, they're in trouble. But yeah, guys, thanks for watching, and don't forget to like, comment, and subscribe. Thank you.